Hey guys, this is Jeff from Zen Trader, and I wanted to explain in this video why I went to cash on Friday. I've got two reasons. Number one, I'm going on vacation, although it is a working vacation because these last 2 weeks of August are anything but normal. But that's not the real reason. The real reason is when I re-entered on the short side around here, my target was the previous lows. I felt that was a gimme. I thought we were at least going to go down there. We're probably going to go down further because I generally sell too soon. But I am seeing some positive divergences and some extreme sentiment readings, which lead me to believe rather that we are going to bounce before ultimately heading lower. I want to show you this 3-4 year chart on the three-line break chart. Three-line break chart. Sorry, it's really late. It's been a pretty hectic day, but I really wanted to get this video out. I checked the last 10 years, but it's too scrunched and you can't really see it. So I figured to best illustrate how severe of a drop we've had, I would compare it against the 2008 because I think that's the event that's in most traders' minds. And I wanted to see if we had a period in time that was similar in consecutive down red candles. And so I'm looking at this area from here because this was a white candle, so it interrupted the downtrend. So from here to here is, by my measure, right around 558 points. And what we have seen from top to bottom right here is about 494. That may be a few off, but it's pretty close. It's about 60 points, give or take, of potentially more downside to equal the largest decline segment of the 2008 financial collapse. That's how serious of a drop that we have had, but without any real sort of substantial bounce. That's fairly significant. The McClellan oscillator hit lows, same lows as it did in 2008, and we are actually having some positive divergence in that indicator as well. So I think this is significant. When you look at the put call, you can see that we are back in the high put call range. It could go a little bit further, and this is like my blood in the streets type level. You know, we actually have some positive divergence on the Bollinger Band width, I would say. Basically, the volatility it's not as severe as it was. And when you look at the VIX, you can easily see that we had this massive spike up to the 48 level, which we only had really two other periods. I'm counting this as one period where it was extremely volatile, and now we've gone up and we're not exceeding that. So volatility, even though it's high, it's declining. So you know, that to me tells me that traders are really just getting tired out. And then the other sentiment indicator I wanted to show you here was the NASDAQ advanced decline, and it's not making a new low. So I mean, this is not good action, and ultimately I think we are going lower, but I think that we're going to have another opportunity to allow the market to rise up and get short again. And who knows, if my timing signal turns positive while we're in the midst of that bounce, then the market then could go on, and I'll get long then. But in the meantime, I'm finding myself sorting through charts over the weekend, kind of looking for some really oversold stocks that are in really nice uptrends, but their weekly charts are just, they look like they've fallen off a cliff, but to support levels. And I'm looking at some of these stocks, and I want to buy, but I think I'm just going to sit on the sidelines and kind of let this market calm down a bit.